Hello and a warm welcome to Talking Stocks. I'm Gugulethu Cele. In studio, I'm joined by Ashton and David Gibb, both from Anchor Capital. Now today we're talking about a company that I have never heard of before in my life, and probably because I'm not too much of a gaming fan, but maybe after this I might be slightly more interested, not only in the investment case of this company, but some of the products that it also develops. Activision Blizzard. Gentlemen, I have put out my disclaimer there, so educate me and perhaps many more South Africans, in particular females, who aren't too familiar with this gaming company.
So this business is effectively a publisher of interactive games. And they own some of the largest titles in the world. In fact, it's the largest publisher in the US and Europe. For the gamers out there, they'll be familiar with StarCraft, World of Warcraft, and Call of Duty. So it's really online and pre-packaged box games that get sold to play on consoles. And a large business, $22 billion market cap, makes a bottom line of $900 million. And we just think fundamentally a very good quality company, which is probably improving, we would say. And I'll give you some reasons as to why we think so.
Maybe if we do look at some of the metrics to justify just exactly how much of a high quality business this is, walk us through some of the key numbers that we refer to.
Okay, so we've already said it's a fairly sizable business, $900 million worth of profit in the last year. The return on equity at face value doesn't look very high, it's about 15%. The shareholders' equity of about $8 billion. But in the combination of Activision and Blizzard in 2008, they were separate companies prior to that, significant goodwill was created, and about $7 billion of the $8 billion of shareholders' equity is actually goodwill. Now, that's not something you need to keep reinvesting in. So the actual operating asset base is only about $1 billion worth of capital, generating $900 million worth of profit. So it's a very capital light business. There's more cash flow than earnings every year, because they've got an amortization charge of about $400 million, but actually the capex that they're required to spend is about $100 odd million every year.
Sure.
So free cash flows are about 20% higher than earnings currently, and as a result they've got the ability to A, pay off debt, which they will be doing this year, and B, reduce the shareholders, the share count if they so choose to buy back shares.
Coming back to the gaming theme, I think the closest competitor here might be Nintendo. Correct me if I am wrong,
So
but how would
Nintendo would be like the kind of mid to early 90s type of brand, I would think. But as far as I'm aware, it is still around. But the Electronic Arts is a similar size business to what these guys do, online games and console games. They're a similar size, slightly smaller.
Perfect. Well, if we do take a look at some of their most recent company results, I do know some highlights with regard to significant layoffs. The dividend increased substantially, though. But what were some of the key highlights which just justify again how strong this company is going forward?
So it makes about a 70% gross margin, about a 27% operating margin. Very strong metrics. I think what's quite exciting for me, and this past year wasn't a particularly strong growth year. We think the coming year will be up about 30% or so. Some of that is the acquisition that they've made of a business called King Digital, which is really a casual mobile gaming business, of which the key brand or the key gaming title in there is Candy Crush. There is some risk around that because it's one title that's about 2/3 of the revenue of that business, and it could be on a declining trend. And we think that they've acquired that business more for its user base and the ability to actually cross-sell a lot of the existing Activision games into that user base rather than what it actually represents right now. But for me, the attraction of this business is that you're seeing a significant shift, a multi-year shift from offline game sales. In other words, someone goes into a computer game shop and buys the box and the console. You're seeing a lot of shift from that towards more digital and online sales. So digital sales were about 26% of revenue back in 2008. They're now about 54%. And if you dig further into that, so that's also the purchase of the actual game. But within that, we think the annuity component of this business is rising. And what do I mean by that? So you go and buy the original games. You might buy the World of Warcraft, let's say. And that's a good example because it's a multiplayer game. So you'll play against a number of different players around the world. And part of the user experience is the fact that they've got such an entrenched user base out there. There's big network effects. And that's, as far as I'm aware, it's one of the largest in the world. It's been around for 10 years. It's almost a franchise. Sure. You can think of it as the computer game equivalent of a Star Wars. It's a multi-year franchise for which new iterations keep getting launched, and you've got this existing user base that plays the game. So where does the annuity component comes from? Well, once you've got the sticky user base and you're playing against your friends in that game, someone walks into the room with a larger axe to fight you with. You want to go and buy that axe. So they can actually sell you more product and more content within the game. And our discussions with the investor relations team indicate that revenue from that type of source is about $1.6 billion. It's about a third of the total. And in constant currency, that was up more than 50% year on year. So we think that traditionally, when you look at this business, there's tended to have been quite a cycle associated with when new gaming consoles are launched, like an Xbox or a PlayStation, and people tend to wait until the new, if there's a year to go for that new console to be launched, gamers tend to wait for that console to be launched before they go and buy the new game. So you tend to see a bit of a hiatus in sales for gaming products in advance of a new launch. But as you become more and more digital and more these games are played online and more of the annuity revenue rises, so that cycle we think will start to abate. And if the cycle starts to abate or reduce somewhat, to us that makes it a more predictable business stream going forward that would argue for a higher rating than we've seen in the past.
David, maybe if we do take a look at the geographic revenue split here, together with an understanding of actually who this user base is and how they're trying to expand on that further to attract females like myself who probably haven't been interested in gaming before.
So geographically, I mean, it's really a US and European focus, and then Asia Pacific is less than 10% of revenues. So, and that's really a point that we should come to, is that mobile gaming is now overtaken the size of mobile gaming in China is now bigger than mobile gaming in the US. So that's an area where they we'll touch on it a little bit more now. The mobile gaming is an area they need to focus on, but it's primarily the US and Europe. So that'll be 90% of their revenues. So historically, people must remember that this has been a PC and console-driven business. But hardcore gamers who play on PCs and consoles are probably less than 20% of gamers out there. So the rest are casual gamers, and a lot of those games are now played on smartphones. And this is a market that they have ignored up until very recently. In fact, in 2013, the CEO, Bobby Kotick, said that we don't really think that mobile gaming has much of a future. We think it's too faddish. But at the end of last year, they announced a big acquisition of a mobile gaming company. So they've obviously realized that playing with less than 20% of total gamers and really focusing on hardcore gamers is a market, that they ignoring the rest of the 80% of the market. So they're now having to branch out. And it's quite a difficult shift to go from PC and console to mobile. The business model is different. Typically, you pay upfront for your game if you're a PC gamer or a console gamer. Admittedly, there's some subscription revenue, but with mobile gaming, it tends to be free, and you pay for things along the way. So you'll buy extra things. They call them avatars in a lot of cases. But basic playing of the game is free. So it's a different business model. And I think the companies avoided the shift up until recently, but now they realize, we've really got to go for mobile.
Is this where King Digital, together with Major League Games, if I'm not mistaken, come into play with regard to the diversification strategy?
So Major League Games is slightly separate. That's where it almost sounds bizarre in that you've got this, you've got a spectator sport for people playing computer games. So they actually arrange these spectator events where you'll have thousands of people watching other people playing games.
My goodness.
Against each other. It's a funny world we live in, but there's evidently a market for this, and there's an advertising opportunity for Activision in this. But outside of that, obviously the big mobile casual game that we would mention in King is the Candy Crush business, or the Candy Crush game, which is about 2/3 of their revenue. So King Digital was acquired as part of the strategy to expand further into the casual gaming segment. They paid about $6 billion for that acquisition, and it'll represent roughly 1/3 of the profits of the enlarged group.
For example, I always find it interesting to compare this business, which has a Western origin, with some of the Asian businesses. For example, a business like NetEase, based in China, where I think in 2017 the projection is that 40% of their revenues will be from mobile games, whereas in this case at the moment it's less than 10%. So by 2017 it might be, between 10 and 20, but that'll be half of what the Chinese, the mix would be in a NetEase. So there's a transition that needs to happen here for them to realize more revenues from this big gaming market out there. And they're in the early stages. This deal should close by the end of February. And then we'll have to see what their moves are with this King Digital, what they can make out of this business.
Interesting dynamic, certainly at play in the world of gaming. But let's find out now from our experts whether to buy, hold, or sell the stock. David, let's start with you. Buy, hold, or sell Activision?
So for me, I'm going to sit on the fence for now. I'd like to see progress in the mobile gaming space. I think the CEO, Bobby Kotick, is a fantastic CEO. In fact, he's been in the industry since, I think, 1979. So he's well respected. So he's likely to, if he puts his mind to something, he's likely to succeed. But for now, I would call this a hold. But certainly a high quality business and one that I'd keep a close eye on.
Buy, hold, or sell, Sean?
I'm probably leaning more towards buy. I think there's a little bit more research that we'd like to do in certain questions that we want answered. But I think a lot of the investment case has also been de-risked by price action. So this stock peaked at about $38, $39 in late December. They came out with some results where I think certainly the final quarter numbers were a bit of a miss relative to expectations. And in terms of forward guidance, they've delayed the release of one of the key titles for which have been highly anticipated by gamers. So that was a bit of a disappointment, but I think the stock was disproportionately punished. And from going, you were at a point where you were paying a forward 20 to 25 multiple for it, to now being about 15 or 16 times on a 12-month forward basis. And I think for the longer term growth potential of this business and the quality of the cash flows coming out of it, that to me looks like quite a reasonable valuation level.
Exactly. Outlook certainly looking very positive for this company. Maybe one that I'll look into in the future for a potential female gamer. But that's where we'll leave it for today, discussing the stock Activision Blizzard. We'll be getting a buy and potentially a hold from our guests this evening. A big thank you to both Sean Ashton and David Gibb joining us from Anchor Capital tonight. Join us again next time, though, where we talk more stocks.